Cool, brilliant. Can you hear me? Testing 1 2 3 1 2 3. Can you hear me? Testing 1 2 3. Yeah. Okay. Cool. That's all working. Right. Sweet. So let me just crack on. Yeah. Okay. That's all working. Right. Sweet. So let me just crack on. Go through my watch list. So what I've got on watch this week, might filter this a little bit more just before I document it, but I thought I'd make a quick video. This week might filter this a little bit more. Just let's have a little look. So Euro USD. I am looking at shorts. I'm still aware that we could go long, but I'll start with the DXY and tell you why. So with the DXY, we can see that we've obviously got this little point here and that point there. The interesting thing about this is it's already kind of shown its hand now. So after we've had that sort of push away off this, we've then broken this now and we're creating consolidation. I think coming up to this point is possible, but we would need a huge amount of momentum to just give it that push. It's not impossible. It just really depends. Like if we start rapid this week, if we move rapid into this area, there's a possibility that we might just correct into this and then sell off. But I think the likelihood is we come into these areas and then we can probably get sells. We have to also know that sometimes when we do tap into these areas, it is a bit slow. We don't always move. Sometimes what we tend to see is that we tap in here and then we get corrective a bit and then we sell off. So keep that in mind as well when you are getting position in there, that if price doesn't respond, you know, with sort of sharp momentum, it might be stalling. And if it's stalling, do you want to get repositioned, better protection, these sort of things? But yeah, ultimately, it's a very self-explanatory, simple one. You know, we've got a clear point of interest on the charts. Just take that off. Got a clear point of interest right there. I wouldn't neglect this part as well. You know, I think that we could get trapped if we're just looking at that first point because they're so close. I think that was very intentional, and now it's basically in there. So, you know, even if this sells off temporarily and starts coming back up, and then you kind of have, you know, overall this sort of squeeze, that's even better, because then you've got like a section 1, which is subjective. You've got section 2, and then you've got your section 3, which is in this area, does whatever it needs to do, and then starts to commit to the downside, and you can get really positioned well within that run there. You can get positioned up here, probably not right at the top, but within there with some refinement, and then in here with, you know, basically taking it on a moderately decent time frame, and then so forth, scaling in. So keeping that picture in mind, when you kind of see that and understand that, it's better for you to wait for price to tap into those areas so that you can then play that sequence. And I think that's how you're going to make money this week. In fact, you could probably pass a funding assessment. You could most likely scale up as well if you're sharp enough to just focus on the right things this week. And that's something coming off the back of last week, where I did notice as well that a lot of the mistakes that a lot of people are making is bad filtration. And usually it's because they might have so many things on watch. Like, don't get me wrong, I've got quite a bit here, which I'm probably going to remove some of it, but I've got a lot of things on watch here, so my attention will be deviated, but it will require a higher level of skill of filtration every single morning. So I'm taking away more time off myself to go and filter through this. And then in the evening as well, I'll spend more time filtering through it, logging more missed trades. So sometimes having more isn't necessarily better for you. In fact, having more can sometimes be a lot more overwhelming. And in the moment when it's overwhelming in the week, you know, let's say, for example, I'm focusing too much on Euro USD for the short, and the short doesn't come, but then gold flies. And then I'm looking at myself thinking, oh man, how did I miss the gold trade? Well, I had too many things on watch. So Euro USD, I really do like this one, because obviously, like we said with the DXY, if the DXY is going to move higher, Euro USD is going to come lower. Euro USD could easily just create some sort of continuation here, to then for us to play that very impulsive move. The great thing about it is if you divert your attention to this bit of price action here, you can see there's nothing really to the left. So it's a clear pathway to the downside. In fact, we may not even need a correction at this point. We might just rapidly start selling off as well. So within that impulsive run, you do need to come to the conclusion that you may not catch a trade, but also if price does start to run, how are you going to adapt with it? Because when you do look at it, price has done quite a lot already. You know, price is doing a lot of stuff within this whole corrective wave here, and it's built a lot of volume up in there. If that's basically now at the breaking point there where it's going to really want to convince people to go long, we could just tap into this and just sell off, and then people are just caught out on the wrong side of the market. So it equally goes with some other pairs that we're looking at as well with the US related, but something to bear in mind. In no way is this in any order. So yeah, none of this is in order. Do you guys have any pairs you want me to go into before I go through the whole watch list? I'll start going through it, but if you've got any pairs, just throw them in the chat. New Zealand US dollar. So NU, same situation as EU. I'm still looking for shorts. So if that develops, this develops as well. The likelihood is we're probably not going to develop too far. Nice, yeah, AU. Similar thought process across the board anyway with these dollar related pairs. Remember though, if it does happen to turn around for example, I will be wary of that point there. So if it taps into this area here and then rebounds, fair enough, I understand that possibility because of where the positioning is on pairs like GU and stuff. But the odds are AU and NU, they could just start moving quite aggressively, whilst you see something like EU, GU kind of just moving moderately, you know, just decently slow, 60, 70 pips in a day, where you see NU and AU move like 100 odd pips. I've seen this thing happen many times, so bear that in mind. But I am looking for sort of this structure right here, isolation. I'm not worried about the price action up here. If price does spike, then fair enough, I'll price that in as the second point of interest. As I mentioned in yesterday's video as well, when I was doing the ASR, that would be the second point of interest that I'll price it into. But more than likely, I'm not going to worry about that. I'm going to just basically be playing it for this section here to go to the low. And Aussie Swiss, you know what? Someone mentioned it last week. I think they were looking at the trade here. And I said, you know, this whole area is still a good area to be taking the trade. It's just, that's a two touch, comes in here. That candle there was solid. And I think this is where I said, you know, this whole area here, if you're taking the trade there, really and truly just get the protection down there and then play that trade, because then how that develops in corrective, whatever, at least you're protected really well, Hazef. And essentially that's the trade there. So I think the nice thing about this is it's kind of looking like it could be developing into a bit of a larger structure here. So the nice thing about it is because where it's positioned, it makes even more sense. So I'll be looking at it very cautiously here, where I would want to see price action kind of come back into that region. And then when we see price kind of just come back here with a near miss gap, it creates more probability towards the side of looking for longs. And then I'll wait for an insurance entry and try get refined. I'll be honest with you, I know a lot of us stick with 10 pips, and I think 10 pips is a great base point, but you know, if I can get away with less, I'll probably try get away with around about 8 pips on this. Not just because of the risk reward, but just seeing how price action has been throughout, I think I could probably get away with something like that. I would want to mitigate against a bit more, just as an example here. Depending on how price formed, I would see if I can get away with it, because if I just pull up that little bit of price action there, just as an example, you can see the steepness of this. Even though it kind of completed what it needed to do, it did have a bit of a washout there in it as well, where to the naked eye that can seem a bit irregular, and you could get irregular price action. So that's why in most case scenarios, a 10 pip would probably be your best bet. So yeah, just wanted to kind of point that out. But yeah, if I can get in with a little bit less, I won't be worried about it. I know it's a Swiss pair, it's quite corrective and stuff, but you know, it's really and truly like when you've studied something enough, the ugly becomes quite clean. you prefer, so you got Aussie US dollar. I think I've got Aussie US dollar down here. Let me just jump into that quickly when I've got the US dollar pairs up. Same situation, but you can see the other ones I'm looking for a 3-touch. This one, I'll be honest with you, you have to be on the ball with it because you've got your little point there, but also don't neglect this little point here, right? You could actually respond here a bit early and sell off and then not come up for that top part. You might not come for this and you might respond here and you get the response there. So this is something that I haven't actually shown in my demonstrated inside this forecast, but it's here where you've got basically an internal flag within this. And then what happens over time, this develops, it comes down and then it develops, comes back up, and then this just becomes a part of a running channel. So keep that part in mind as well, that price doesn't necessarily need to come up here to tap into that. It could still be a part of something which you cannot really tell too much about, and it just responds to this. And then it does that, comes down, breaks the low, comes back up, and then becomes a part of that, right? So something just to kind of be conscious of as a variation of what could be developing there. But that's why AU is kind of more of a wild card for me. It's not a main watch pair. Didn't quite make it up there. Whereas for me, EU, you can see it's a little bit more cleaner. It doesn't have that sort of running channel variant to it. If I can get a clear, obviously it's very undeveloped in comparison anyway. And then you've got NU as well, where NU similar, but you can see like, you know, an AU, we're looking up here. We're looking for price to come and tap up into these areas, and you still within that inside part. So that's why I kind of saw that little bit of interesting thought process there. Let me quickly scroll into the next one, Aussie Swiss. So I know you got CAD Swiss. I've got Aussie Swiss. So they could be quite similar, but not always the case. CAD Swiss can be tend to be quite messy. Same situation, literally same thing here. I just think that in comparison, do you know what? You could argue that this looks cleaner because there's less noise, but I don't know, I kind of like Aussie Swiss a bit more. And strike rate wise, I haven't really had a good strike rate with CAD Swiss. I don't think I've actually taken major wins on this pair. Maybe like a few 1% or break evens, but nothing crazy. So either way, CAD Swiss, Ace, Aussie Swiss, they're probably going to go together. We'll see that. Still good. Same thought process. Let's go back to the watch list. Euro Yen. Euro Yen, that is very self-explanatory. I hope you can basically see and understand what I'm looking at. So if I go to the weekly, you can see that price has just given us an indecision candle there. Doesn't necessarily mean shorts are in, but it doesn't necessarily mean that we have enough, what's the word? We don't have enough confidence in the market to push price higher. So we're waiting for more confidence to be determined. So we can see prices kind of, obviously, if we look at it from the base point of, that's the top, we're kind of topping out in this area and we're failing to push higher. And then even after we had this sort of indecision to the low where we were pushing higher, we had that strong candle. We should have just seen follow through and continuation, but we didn't get that. In fact, price is just stalling. So to me, this seems like a range. This seems like it's accumulation for the next move, but also we still have that gap there. So when I then looked at the weekly again, and I was like, okay, hang on a second. Why would the weekly be stalling here? What reason does it have to come lower? Because it looks extremely bullish. And I look at on the monthly as well, and the monthly looks, you know, very bullish off last month. But what do we know? Sometimes we do like to make a little bit of a retracement as we move into the next month. So obviously now we're in the beginning of November. We do need to be conscious that, you know, we can get retracements in these areas. Why? Because again, where are we? We're situated here. We're at the high. We're at a monthly high. So if we're at a monthly high, there's the possibility that we can still be coming back down in these areas, right? We're still in prime time sell territory. So don't take your foot off the gas because things look bullish. Consider the opportunity that we have in place with these yen pairs, that we could be in a high time frame potential selling point. And as a first port of call, if we start selling aggressively, which is very, very possible, you could be taking it into here for a 19-1 with the right position. Now, I'm not saying it has to be a 19-1. It could be a 3-1. It could be anything above. Still good trades there. So it's what I'm looking for. It's what I'm waiting for. Then I go down to the 4 hour and I'm just waiting for continuation. Now, I'm not going to look for perfection. That's something that I'm clearly stating now, is don't look for perfection. Once this has its 2 tops and 2 bottoms, set your reduced risk entry, right? Write that down inside your forecast as well, that if price develops, I'm going to set the reduced risk entry here and then make sure I can manage it for a 1-to-1 into the next point, and that's it, it's done. So you either take the risk entry or the reduced risk entry. It's a 50 to 25 pip difference. It's not a big deal. You know, where I'm looking at, you know, taking the trade into, you know, let's say even the gap fill, right, as a target. The gap fill over here, I'm still playing a 7-to-1. And then with the risk entry, I'm playing around about double that. So again, it's something that I think can easily go missed for a lot of people, where they're going to look for that risk entry high up in the run because they're going to see the 19-1, and then they're going to dismiss the opportunity for a reduced risk entry because it's going to drop off too quickly, and then they're going to think they missed the trade. So let that play. But right now it's still underdeveloped until we've kind of confirmed with some sort of structure, or at least a 2-touch, and we can set the reduced risk entry. We don't know if that becomes a 2 and then starts coming back up, and then you've got this. So again, it's one of them ones where you want to be a bit more careful. I bet Zeph's thinking she's cooking again, but yeah, no, she's not cooking. She's just doing something with a pan. Let's see. Let's just take that off. So yeah, easily great trade here. Just need to be a bit patient with it. Reduce risk entry and entry. Let me see. So Swiss CPI on the morning, 11:30 your time. I guess that could temper with the structure. Do you know what? I wouldn't be too bothered with it, because, you know, right now it's still underdeveloped. So if price did just shoot up from here and it just went up, fine, fair enough, okay. You know, then we understand that, you know, this whole time that was enough. That was your little structure in there, and then this is just perhaps maybe just moving to the upside, fine, it is what it is. But in the case that news comes out, it actually helps us, because then let's just say price stalls, starts moving, comes into this area, gives us our confirmation, and then news comes out and boom, it just goes. Then you're looking at it like, wow, I positioned myself really well. But at the same time, on prop firm capital, you're not going to take that on a full risk at all. You're going to take it on 0.25, and maximum with slippage, you're probably going to look at something like maybe 2% loss. So you take 0.5% loss. I'm okay with that personally because of where I'll be situated on my account. But for some people, it's way too risky because they'll be trading 0.5% risk and stuff going into news. If we can shape up for London session, New York session on Monday, that's great. The likelihood is you're going to take the trade, but then you're going to have to sit through CPI. Is that CPI news? Yeah. Oh, you're going to have to sit for the interest rate. So again, it's one of them ones, unless you waited. But I think if you waited, you would then probably have to catch it a bit late. You'd wait, you set your order here, you'd probably put your stops down there, 30 pips, and then you'd play it for, you know, 1.5 into the high, and then basically just manage it accordingly. Obviously, it's a little bit above it. And then you could just set it. So if the price is there around about interest rates, and then it spikes, it will tag you in. Your stop loss is quite large anyway. So even if it spikes up, comes down a bit and comes back up, you'll probably survive it. And I think taking a trade like that isn't necessarily the worst idea, but it's just something that I wouldn't be of preference of because of where we're positioned in the run. Obviously, I'm not anticipating this being the end. I think the odds are we're probably going to be making our way a bit higher, maybe even to this point here, to the left there. So, you know, it becomes a 4.35% trade. Still decent. I'm happy to take the risk on a trade like that because it could just be aggressively, it could aggressively move, or it could be corrective. Obviously, we can't tell right now. GN needs some more time. I think I put GN on watch as well. Now I've got EN next, actually. Let's go on to EN. So when you say more time, I assume you're looking for this, right? You're looking for a development of a flag. I think this would be perfect because of where it's positioned. Because we're positioned basically we topped into the high, we create a 1, 2, 3 in the middle section here, and then we sell off, that could be great. So I think a trade like this would be solid. And if we could get something like this, I'm more than happy to get involved on a trade like that. I'm going to be waiting for something like this personally, something more developed. If it's a two-touch, then I'll have to evaluate the internal structure, but playing it from the middle to the downside, perfect. Especially when you kind of price it in like this and you see it for what it is. You know, we've tapped into the high, we've broken this, coming down with momentum, we create continuation. Arguably it's a bit corrective, but really and truly when you pattern separate it, there's your correction. You left a hook point, you sold off, you broke the low, you came back up, tapped into the hook point, and now you're in the run of momentum. So a larger flag isn't technically the most necessary element, but look at that momentum. Look how the 4 hour closed as well, and I think that's very intentional. You know, that's not just the end of day, that's just literally a part of the momentum, and it's now just consolidating here. I think if we just let it consolidate during Sunday into Monday morning, I think Monday morning London session, even New York session, you might get a phenomenal trade for the short. So that's basically what I'm going to be anticipating and waiting for. I think the same applies for GN. Let's see gold as well. That's the last one on my watch list on the top, for the top 6. I think I actually have more than 6. But 1, 2, 3, 4, 5, 6. No, I've got 6. Gold's quite simple. You know, it's either it does this or it doesn't. Basically, it's a difficult one because what you can see here is we've tapped into this low. Right, gold's tapped into the low there. I don't think right now, with all of the media and everything going on about US dollar, gold, reserve, this and that, people really want to be selling gold. So I think a lot of retail traders are going to be trying to buy gold or hold on to gold longs, which I think long term, gold going high makes sense. But short term, we are due a pullback or at least a larger consolidation of some sort. So keeping that in mind, it doesn't have to always necessarily happen, but I'm just anticipating that you've got this section here, you've got this then comes in, completes over there, retest the back end of this comes down, gives us a small insurance entry where we can take a trade, and then we can at least play it to the downside here. And then we can evaluate if we're pushing any lower and we can just manage accordingly. But at least into that point there, I can be aggressive and I can walk away with about a 3 to 1, a 3.5 to 1 at least. So I'm looking to take a 3 to 1% trade on this. If it goes even more aggressive, great. If it doesn't, it is what it is. Yeah, let me quickly, now I've just gone through this, let me just quickly go over to GN and I'll go through these questions. So GN, I've got GN here, same situation. You can see, you know, it comes down, creates a base, comes back up, taps through this, retests the back end of that, comes down, insurance entry and goes. That would be the most solid scenario that I can see for a short, but it's not necessary. We can just sell off. We can just sell off from here. And that being that, so it's just one of those ones where I'm kind of more on the side of I would want to see something developed, but because of where we're positioned, especially if you look at it on the weekly, it doesn't need to give you some sort of massively structured flag. It can just sell off, tap into those lows there, and then eventually retrace and come back up before it even gives you any sort of entry. So that was the kind of variational difference where I was like, you know what, if I had to filter, I am looking for quite an ask on this as well. So I would want to see, I'd have to see this where you put your 1, 2, it rejects from where it is now, it comes down, creates the base. That's the second thing I'm looking for. Then I want to see it come up as a 1, 2, 3. So I've got that internal 1, 2, 3 structure is another thing I'm asking for. Then I want to see it respond to the retest and then come down and give me an insurance. So you see how many things I'm looking for at this point. It's becoming less and less reliable because I'm fighting against so many variational things that really and truly in isolation, all I'm looking for is this. I'm just looking for a base, and then I'm looking for that structure to be confirmed. And then I want to see prices tapped into this section here, insurance entry, I get positioned in there. And then in terms of PSC, that's great. So yeah, that's essentially it. But there's a lot that I'd want to see, and when I looked at it, I was like, you know what, let me filter between E and GN. And I know last week somebody asked me, about filtering between these pairs. If you look at this one, it seems a little bit, in my opinion, nicer for the run because I've got a bit more for better run and clearer price action to work with. So I kind of chose this one over that one. Personal preference. I measured the impulse to the flag on CAD Swiss to where we probably going. Taking a swing. More recent, that's what I prefer. Let me have a little look at CAD Swiss again. Yeah, do you know what? If I measure that as well, let's say we take it from here to here. Yeah, I mean, I would easily as well agree with, into that point there is definitely, even without this measurement used, you can see that we're clearly moving into that section. It's just how we get there is the most important part for me. And right now I'm seeing it as, if we're measuring it off, it's kind of like, okay, we've had our phase one, this was your tight bit there, you've had this correction, you've had your little bit in there, and now you're getting this section here. If this is going to really go into just this section, then it's probably just going to get there and then respond, right? But the truth behold it is we're probably going to accumulate now, and then within that accumulation we'll have to wait and see. So if this does accumulate in here and does this for however long it needs to throughout the week, the larger that is, probably the better it is, because we're probably likely going to break above this. That's one of the other reasons why I like CAD Swiss. It's just, I look at the variations of what could price do, and then I see that, okay, well, previous lows down there. So CAD Swiss could get a bit messy, whereas if I look at Aussie Swiss, right, equally, if you say the retest is down there, it doesn't really need to be, because you're kind of trading through this section here as well. So then it's kind of like my retest is here. It's just one of those ones where, I don't know, personal preference. I suppose it's the same thing we're trading here anyway. As long as this develops here and does whatever it needs to do, and it comes in this area or does whatever, however it approaches it, you're still good. As long as you're getting positioned within the structure for that long, the likelihood is we're coming up there. Unless we're responding to this little hook point here, right? Then this fails, and then price sells off, and then gives us some sort of continuation down there. Then you just want to be selling that, conscious of that retest section there, but you want to be conscious. You want to sell that. Why? Because we're basically responding to the hook point here. We've done enough, and then basically we're not basically moving to that point anymore. We could be coming down lower, and then this could just be developing into something for some future larger flag or whatever it is. So look at both sides of that. Obviously that wasn't the cleanest drawing, but just bear in mind that hook point there. What's the next question? I have an issue with the 2 touch flags on the 15-minute. Good with the 1 and 4 hour and daily. Yeah, okay, well, it's the same thing. It is the same thing, but I'll tell you something. If you're good with the 1 hour, 4 hour and daily, just build the consistency with that. Really and truly. A lot of people, they want to use the 15-minute and the 5-minute because there's more trades that pop up, but more trades doesn't necessarily mean better quality, and they don't always necessarily mean they're going to make you money. So I think the best thing you can do is just eliminate it. Still, you can data collect it and then get better at it, but in all truth and honesty, it's good that you've identified that you have some level of an issue with it. It's something you can work on and train in the background. Maybe you can set 20 minutes in a day or 10 minutes a day, even the same, or however much time you've got, just to kind of build that better confidence with it until you want to incorporate it later. But I wouldn't even touch the 15-minute until you're consistent with the daily 4 hour and 1 hour. So not the daily, but the 4 hour and the 1 hour mostly. I think the daily is still a variation or good thing to have, but it comes in at the right time. I don't think it's something that you put a daily trade on your portfolio when you're kind of a newbie, because I mean, it's not necessarily the worst thing. It can train you to kind of hold trades longer and stuff and not be so lenient, but margin wise and things like that. Just swaps and spreads. You need to know what you're doing as well. So 4 hour, 1 hour, stick with that. Super cautious with the second touch. With, yeah, GBP CAD. GBP CAD. Oh yeah, you did ask about GBP CAD, my bad. Let me go over to that one sec. Yeah, now, do you know what? I almost put this one on watch until I kind of just came to the conclusion that, you know, this could have a sharp pullback as well. It doesn't have to develop here, because look at where it came to. So all of that momentum was basically just targeting that section there. It's basically got to where it needs to get to. Now it needs to accumulate volume if it's going to continue to the next point. And how is it going to catch people on the wrong side of the market? Well, it's going to start doing this, and then it's going to start making people think, and then it's going to just do that and develop. And then it will come back up, and then maybe just kind of mess about. And then next thing you know, we've got a larger flag or something on our hands. Right, I'm not saying it's going to be that large, but the market's going to try to trap people in. You know, it could do something like this and just push up and then come down and then do this, you know, and next thing you know, it's then developed into some level of a flag and it's continued lower. I would wait for structure. I would wait for structure. I wouldn't get into something so tight because of where it's positioned. Remember, if this was positioned here and you had a clear target there, fair enough, man. I would be all over that. I would have that on watch this week and I'll be like, yep, I'm getting involved as soon as that shapes up. That trade is there. I'm going to be trading that into this section and then manage it into that section, hopefully. But right now, because it's positioned where it is, doesn't mean you're necessarily wrong. It just means the risk that's involved with this having to develop and doing that. If it was at this stage here, I still wouldn't be 100%. I'd wait for something more confirmed on it, like an insurance entry in that, to then go short. But this, to me, is looking like it's going to develop into sort of something like that. It's going to be like this, and then it will pull back, maybe even become a bit of an expanding, then drop off, you know, and I would just be a bit more on the cautious side with a trade in this area here. Not that it won't continue lower, it just might not continue lower in the form of a tight small flag. Also, there's a clue in there. If you zoom in and you look at it, look at how this flag has begun, right? A lot of flags, they don't usually begin like that as well. So in order for me to really see this confirmed, I would want to see it sell off again. I would want to see it come up, failing to reject in these areas, even sell off again and then come off in this area. Even at that point there, the trade is worth taking because you've basically shown that you're ranging within here. This section here is holding, and then you've had two tops, two bottoms, and then if you've got a rejection there or even a washout, which is even better, you could get traded in there to then trade low in there. And then because you're coming from momentum, it's showing that this is just accumulating volume for the next run, where it's not more of a trap. Right now, it's looking more like a trap because we haven't got all of those elements to it. We've basically just tapped into low, and then people have bought it back up as it broke the low. So it's now kind of thinking like, okay, well, we have a push up and now we have a bit of a flag. Is this just going to continue higher, right? So that's the variational tricky part to it, where we don't know if this wick is a part of a underdeveloped structure, or if it's literally where bigger players have stepped in, bought it, and now this is the small bit of consolidation and then it pushes higher. So we have to be the ones to decipher that. And I think when price is very subjective like that, especially with where it's positioned, the best thing to do is wait, because then the bigger players will reveal it and you'll be able to take advantage of it. GBP CAD, yep, finalizing the watch list today on the third process would have been comparing mark. Yeah. So Mark's pairs, he had, let me just double check. Mark had, I'll tell you what pairs he had. Just get a pen and paper down. You'd have to do your own analysis, but I can tell you what pairs he had.
Right, people, it is the first
Yeah, okay,
of
so if you got pen and paper, he had, so DXY. Oh, it's already popped up on the screen. Interesting. Oh yeah, because it's on my TradingView. Here it is. So yeah, so basically Aussie US dollar, Euro yen. Yeah, that's basically his pairs. If you're curious, just so you got it there. And then you can just rewind it backwards to see it. So that was basically his pairs. Just so that you know. Hopefully that was helpful. What was the next one? Pretty interested with all commodities in my watch list on commodities, which are gold, silver, platinum. Yeah, dude, I think right now we are in a extremely good time for not just precious metals, but commodity trades. I think there's a lot of volatility and money floating about that's really given us a possibility to take advantage of, for example, gold, silver as well. You know, it's just, I didn't like silver because it kind of tapped into this, not anything significant, but you know, it kind of just tapped into that. It needs to come up and then come down, give me insurance entry here, and that would be a solid trade as well, right? That would still be a very, very good trade to take. Natural gas, again, another one where it's just making its move higher. It's quite relentless at this point. WTI, it was interesting, but I kind of liked UK oil's price action a bit better. So, you know, we've got a bit of a near miss gap to this where it's most likely probably going to come up, fill it, take out the high and come back in. So insurance entry again situation. This one I did like it, but I'm not liking the daily on it. It's a bit indecision type of price action. Right now we're just kind of stalling in this area. I would want to see insurance entry like I just mentioned, where price just shoots up, takes out this high, pushes back in, gives us an insurance entry, and we can go short. Probably on the 15-minute, not the 1 hour, but this just visually looks better. And then hopefully, if you know, even so, if there was like some sort of internal structure in there where, you know, price kind of near missed again, took out that high near missed, came down, and then did something like that. Just draw that on again properly. And even if it took longer, but yeah, you kind of get the idea of what I'm looking at there. So that would basically be it. Palladium. I don't really trade palladium, to be honest with you. Palladium's one where its spreads can be a bit wild, so happy to stay out of that. But again, I can see that as it's within a range there, so there's probably some like macro trades in there, micro trades. Platinum, not really my preference, but I can see it coming back up to that point and then potentially being within this sort of level of an expanding. So having this as the base, and then it's basically within that, or even if it develops into some sort of flag. But again, you know, platinum's not the best pair on watch there. Looking at copper is relentless. It's just trickling. I'm not a big fan of it because of these massive moves. I mean, there's just, yeah, right now it's one of them ones where it just accumulates and then maybe just drops off again. And then, you know, you've got this sort of copycat price action where it's a bit mad. So yeah, just gonna stay out of copper for a bit. Coffee I think is underrated. I think coffee could really be priced a bit higher than what it is now, but right now it does look like it could be coming down to something, or could be coming back up to fill the gap, which like we've seen here where it filled the gap here. It's possible that coffee moves higher and it's not in a continuation phase here where it looks like it, but in fact what we're actually seeing is price is just stalling, and then price does that, pushes up, taps into this area and then sells off, and then all of that is a build up for price to tap in here to then sell, and you can take advantage of that into that. And I think that would be good on coffee if you had coffee on watch. If that's what you're looking at, I think that's really nice. Cocoa, same situation. It's a bit choppy, but it's selling off. I would wait for some structure here, but you know, you've got a gap there, which I don't think is necessarily needs to be filled. Again, the cheaper this gets, the better it is. Corn, corn's on the rise. I wouldn't be surprised, man. I think corn is cheap. Corn is extremely cheap, and I think during periods of war and stuff, I wouldn't be surprised if the value of corn goes up because the demand. So I would consider buying some stuff like this long term and holding things like commodities such as corn, because corn could really skyrocket from here. So it's being a bit slow right now, and you could argue that you got a low there, but when you do look at it from a bigger time frame, and I'll go down to the monthly, or even go down to the monthly, you can see it a bit more clear. Look where it's positioned. It's all the way down here. Corn was up here around about 2022, COVID, etc. And then boom, it's all the way down here because of war. I think it was I'm not exactly too sure, but anyway, why corn is down there. I know wheat took a dip because of the Russia and Ukraine situation. But again, another one which I wouldn't be more favorable for wheat, because wheat could probably top out for a low, probably come down here, and then in those sections there, you obviously, if you have money, you want to be holding some sort of long-term trades in there for long-term, because look, you got 3 to 10, like you'd make at least like 4x on your investment at some point. Soy is also very cheap. Soy is a very, very good one as well to be looking at. The thing is, when inflation's on the rise and things, all these things get more expensive. So even though that looks like that, look at that monthly candle. I haven't seen a strong monthly candle like that on this pair ever. So that could be a very good sign that we're looking longs on soy. And this could be one that, if we start breaking through, let's say even this point here, the retest, you could be looking for longs on this. I think this might be one that I actually start trading as of probably November, December. If it taps into, let me just take this bit off. If it taps into here and it responds, comes back down, gives you insurance entry, for sure, you could sell that. But if it breaks above and gives you a flag over here, take that long. That long is probably going to be a long-term trade to the upside, and you're better off. You probably make a lot of money, especially if you put that on a personal account. Sugar's not doing too good. Sugar's just selling off, because I think soon there's going to be like sugar taxes and stuff going on, so I'm not too sure. Sugar's not doing too well as well. A lot of companies are going to take massive hits on those rules. GBP CAD, I think we went over this one, but yeah, GBP CAD for the long, man. Why not? If it repels here, cool. At the same time, it could accumulate and still short. I think the short makes more sense because of how the momentum's coming in, but it just depends on how price responds on Monday, Tuesday, Wednesday. Okay, we've got a lot of questions here. Let me go through these questions first. So the first question I got here is, pretty interested with all the commodities. Yep, okay, same as UK oil, Essenya, but on a 15-minute forming on platinum is interesting. Yeah, definitely. GU. Yeah, we didn't get to GU, did we? GU. I think, again, GU's in such a good area right now. It's hard. Like, you don't want to be looking for shorts. You don't want to be looking for longs right now. You want to be waiting to see what the market tells you. And it's a tricky one because even look at that daily candle, how the daily candle closed, that indecision candle. And then you look at it on the monthly, it's tapped into that key area there, but it's come down pretty aggressively, you know. So that's the other thing. And then I look at it on the weekly, which I liked even more. I was like, maybe it needs one more week. One more week where it pushes lower and comes back, gives us a nice candle formation in that area, and then we start pushing higher. So I was looking at that. Then I thought, okay, you know what? This is a great area for me to start trapping people if I was a bigger player. And perhaps maybe if we're looking at the other GBP, DXY related pairs, we could be seeing something. So yeah, 3 touch would confirm a little bit more, but it doesn't necessarily win us over. A long would be so nice, man. If we just break higher, create continuation, and we go, it would be so solid. It would be perfect. So that's basically what I'm looking for, is ideally looking for a long, but I'm conscious that there could be a short. So that's So I had to let the dogs outside. And yeah, let me read the next question. So for the 15-minute 2-touch again, what are the signs to spot in it forming come to a 3-touch? Okay, so it's basically like positioning, PSE. Ideally, and okay, let me cover the 15-minute question, because I think that's a really good question. So on the 15-minute 2-touch, again, what are the signs of spotting it? Okay, so sometimes you can't know for certain, but let's say your value area is up there. Your value area is up here. There we go. And then let's say sequence, right? And this is your low of the range. So that's your range. Now you've come up here. Ideally you're looking for 15-minute flags high up in the run. So if I just measure this up, I'll put it that way actually. Now if I measure that up, we know anywhere between here up to around about 60-70%, a 15-minute flag is high probability. So a 2-touch flag, I would look for 2-touch flags here, definitely, right? 2-touch, even a 3-touch would be great. But in those areas, yeah, sure. But as we get further in the run, a 2-touch becomes less reliable, because let's say you've had your first flag, then you've had your second flag, and now you're coming down just above here and you've had one more flag and you've just broken, right? And then you're getting corrective here. The odds are you've had 15-minute, then you've had another, let's say 1 hour flag, and then you've had another 1 hour flag, but then within there you've had like multiple 5 minutes and 15-minute flags all in here, right? So it's looking great, man. You've had loads of little trades in there. So on the way down, you've had 1, 2, 3, 4, 5, 6, 7, 8, 9 trades. Now you're around about 50% of the range. Okay, we know that this is probably an area where things could develop a bit deeper. So what we see is you're looking for a flag in here, and then you basically come up like that. That's your 2-touch, where you've got your bit of price action sitting there, and then you've got price come in here for a 2-touch. Obviously that's on the larger side of things, but you can apply this on smaller time frames, the same thing. So this is going to be your 2-touch, where price comes in here 15-minute, and then it comes down, creates a base, comes up, doesn't quite do it, and that's your 2-touch, right? That's your 2-touch there on the 15-minute, but refined on the 5, let's say. And you've got your internal 1, 2, 3 coming in here. That's your first touch, your second touch, but you've actually got an internal 1, 2, 3. So from that perspective, you've got a 2-touch, but you've got a 3-touch within it. So that's giving you the confidence there, where these gaps are your clues. The gaps are your clues, and then the 2 bottoms. So all you're really looking at is you've got your top, you've got your multiple gaps, and then you've got your internal structure. That gives you your 3-touch. And that's what kind of helps you in that side. The other scenario is another 2-touch, because we're not talking about V-shapes, we're talking about 2-touches. Even though a V-shape is a 2-touch, it's a bit more of a different type of 2-touch. So now you've got your 15-minute here, where price leaves a bit of a footprint, it comes down, and then it does this, right? And let's say it doesn't give you your 3-touch that you're looking for, but it's left a bit here. What happens is this one, let's say that was your footprint there that you were looking at, but it extended and went up higher, and it's gone higher than you anticipated. It's no longer the same structure you're looking for, and you see why a 3-touch is more preferred in these sections here than just taking some ordinary sort of price action, because you can just instantly get taken out from a just simple trade there on the 15-minute, and that's why people lose on those type of trades. There's no base. You see the difference here? We don't have 2 bottoms. We have the same sort of price actions, the same sort of build up, but there's no bottoms here. So the subjectiveness becomes more, and that's why you could take a loss. I'll show you another variation quickly. Let me just quickly go back and clear that off. So then let's pull out this bit here. Let's say price leaves a footprint here, right? And it comes down, leaves a bottom, it comes up. That's your first touch. That's your second touch. Price then comes here, does this, comes down and sells off, right? That's a variation where it's a bit more for an anomaly. Like that's not a 3-touch, that's still your 2-touch, but it's kind of giving you like an M star in it as well, where in fact it's retested that area there, but you'd look for an insurance entry to mitigate against the fact that you didn't have 2 bottoms. So if you had an insurance entry here, you could play that because you've had a little double top there as well. It's kind of confirming that this pace is holding. We're coming back to the downside. And then you take the insurance entry, it comes down here, but it comes down correctively and it becomes like this. That's your clue that it's now becoming a middle section. So the fact that of the matter is not committing in the same way that I usually should with momentum and so forth, it's becoming corrective. That's then coming up for a third. And then that's your 3-touch, right? And that's how you know it's a 3-touch. You've got your top, you've got your 2 bottoms, 1, 2, you've got your 1, 2, 3, because these 2 were so close. And then that's your middle section. And then what you noticed was you tried to get involved within the middle section, but at the time you didn't know it was a middle section because you couldn't tell it was a part of a corrective move. But sometimes the clues are, you know, how price is developing within it, the size and so forth. So again, a situation like that, you would take the risk entry because you can manage it to the low. And when you can manage it to the low, you can get away with it because then you can walk away with a break even and get repositioned on the 3-touch. So yeah, that's basically it there. Let me go through some next questions. Hope that was useful. Let's see. I've got 20. Whoa. Yeah, was flagging pairs that could be on watch, and I've got a total of 28. Yeah. I know exactly what you mean, man. Sometimes almost everything looks good, and it just means that you were in a good flow when you were analyzing. But also look at it this way: when you're going through it and you're filtering, ask yourself good questions, because remember, real money is made from good filtration. So if you ask yourself really good questions, you'll get really good outcomes. So a really good question to ask yourself is, what's very likely to play out? If you've got 2 of the same pairs like GN, EN, is it really worth you having both of those on? If not, how could you filter the best ones out of it? So what's asking for less? Or more importantly, how can you get the best out of yourself? So what will require less of you, but more of the charts doing the work? For example, if you look left, is there a lot to the left that could really just, say if you got into the trade, can you manage it well? Is it really going to move quite far? Or do you have to be quite aggressive? Will you have to move by the charts a lot? These sort of questions. I tend to try not be around trades that require too much to ask of me. For example, I don't want to get into a trade where there's so many inflection points to the left that actually hold a bit of weight, that it means that I'm going to have to really micromanage this trade to make some money. Whereas I know that in many case scenarios, I can wait for trades that, you know, for example, like EU, GU, that just have a lot of room to commit in front of them. So I can get positioned really well. And then I look at PSE as well. Where are these trades positioned? Look at this big sequence here that we were looking at, right? We've got this section here, so I know it's positioned in the middle, it's less reliable. Now, if I've got a trade down here somewhere, it doesn't necessarily mean that it's not the most reliable, but if I'm comparing this trade down here to a trade all the way up there, and I had to make a decision between one of these, I'm gonna go with this one. I'm gonna go with the one high up in the run. So that's something that I have out of preference, but you would start to find that when you go through your data and see your winners and losers. Where did you have a higher strike rate? Which trades did you prefer? Which structures, bigger structures? Which ones had better confluences? Which ones higher time frame was more in your favor? Something that you would have noticed if you did see Mark's video was, you know, a lot of his pairs were based upon the monthly candle because we're at a new month open and coming to the end of the year. So momentum is moving, and one thing you'll notice is that his attention is spread across where the monthlies are, and then he's building it down from the monthly at this point because it's the start of the month. So something to bear in mind. Yeah, but this corn, copper, IB Mark. I don't think they've got them in their metal watch list of companies. Yeah, they do. Mark trades copper. IBI trades corn. Again, it's just one of those ones. It's not always going to be on watch. It's just when they are, they are. But right now, it's one of those ones where it's been quite aggressive and erratic. We want to be focusing on things that have high probabilities and are very likely to play in something that we have a lot of data on. And right now, the forex pairs are really moving well, so you don't really need to have all of those ones on watch. You took a loss on US oil last week after it failed the bullish flag. Yep, I know which one. Hitting a hook point on the 15-minute flag. Yeah, I would have closed. So I'm gonna pull that one up quickly. So US oil. So yeah, it's one of those ones where, for example, here, I assume it was the Friday trade, right? Or even before it, I think. You've got this trade here. I think, again, you've got these 2 points here, which were always there. And then you've had that one there as well. Okay. So the way I see it is, you've got this trade here, which you could have taken advantage of in there, or you could have taken advantage of the candle there and played it into the low, and you would have been out the trade. That would have been a solid trade because you're basically playing off that, right, for more short. But unfortunately, as I mentioned, it got corrective and then it responded to the base and it came up, right? After that, you then arguably had this section here, which has just about near missed that. So the odds are, because it's failing to continue here, this is probably going to come back up. And when it does come back up, it's probably going to complete on something like that. And then when it completes on something like that, we then wait for insurance entry and we go short again. And that's how you can mitigate against that. That's basically how you want to be seeing it. I think the loss that you took was unnecessary as well. You could have managed it to break even depending on where you got positioned. I'm assuming you took that trade there and 15-minute, and you took it in here on the big candle. So because of how you took it, probably you took it down there. If you did, it's not good. This trade was okay here. If you took that trade, fair enough. I think that's a pretty decent trade. You should have taken a break even. If you took this trade here, I think that was your optimal candle there. Or even if you set it just below, after you had that sort of double pin bar, you could have then walked away with break even again. If you took the trade up here, yeah, it's a tricky one because nothing's really confirmed in that area, so it's difficult. Let me see. Yeah, V-shape in particular. Having issues with them. Listen, just study them more, man. Just study them more. I'll show you example. Remember, I took one on EuroCAD. If you go down to EuroCAD over here, if you just look at a V-shape, high up in the run, you know, you've got this, for example, this bit here. You can clearly see with price action. Price left the footprint here, broke the low, came back up, spiked above, failed to continue, came down, and then broke the low and went. Technically, that is a V-shape, right, which retested this, and then you would start to learn about clues, and you would start looking at retests, where's price moving towards, the footprints, all of these things, and then you'll be able to take advantage of trades like that later on. It's just, again, here's a V-shape as well. It just developed later, but it came back up to retest. You see how it's retested that? And then it's there, gave insurance entry here, and then just failed to sell. Tapped into a bit of liquidity there, and then came back up. You can learn them, man. It's an additional skill, but you don't need it to be consistent. It's just an additional skill to have that allows you to take more entries. And I think when you have a more well-rounded understanding of a lot of these time frame usages, these patterns, you can take more trades, but it doesn't necessarily mean you should. Like, for example, I would see these trades, but I won't take them necessarily because it's not how I'm trying to build my capital. Like, remember, you may only be like 5 scale-ups plus passing an assessment to, you know, getting to 7 figures. So you don't really need to be taking every single little bit of price action and whatnot. You can literally just stick to, you know, what consistently works. And You know, we've kind of seen that many times with, what was I just looking at? Was it, I think it was, I'll just go back to AU. You know, sequence wise, you can look at something high up in the run, right? If I take, for example, here, let's say over there we've tapped into high value area, you know, I just wait, price has tapped into this area, I wait, price has broken the low, giving me continuation, and then gives me another one, and then we're trading into the next low, I wait for that to be broken, and then, you know, it fails here, comes up higher, taps into this area, and then we start going again, and then I just keep taking advantage of, you know, everywhere I can, and then sometimes I'll take a loss, and then, you know, sometimes I won't. But if you look at it statistically now with probabilities, there's a win, right? Let's say that was like 7 to 1, I don't know what it was. There's another win, there's a loss, there's a win, there's a win, or maybe a break even. So call that a break even, right? So you got 1, 2, 3 wins, 1 break even, 1 loss. But then these 2 wins were like, say, 6%. So, you know, you've got 6% break even, minus 1, 5, plus another 3% or more, or even call that another break even, right? 2 break evens, a loss, 2 wins. You're still 5% up. And you know that as well. It's just because I've taken the same type of trades in all scenarios here. Well, I've taken, let's say, first flag, then I've taken another structured flag, then I've taken another structured flag further in the run though, and then 2 of them were great, 1 of them wasn't. Then what I've done over here is taken a V shape. So that's another variation of something in my trading plan. So even if we didn't take that, you know, it doesn't really affect the data. Let's say we didn't take it. We took the insurance entry, let's say. That one was a break even. So I've taken 2 wins, a loss, and a break even. Again, you see how it still works in your favor, and then you keep going through the whole charts. And let's just say you keep analyzing the same pattern over and over again, right? And you only identify the same pattern timelessly. Right, you can then see how much profit you would have made and how much profit you would have, how many losses you would have taken and so forth. And you start adding those numbers up from just sticking with, you know, 3 touches, for example. And you only stick with 3 touches, reduce risk entry and risk entry. You'll start to see how probabilities work in your favor. Truly, look at just Aussie US dollar, just sticking with it, right? If I just stick with this and I trade what I know, I can continuously just make loads of money. I could probably make 7 figures just with trading Aussie US dollar. But the difference is, some people don't have the patience. Some people genuinely do not have the patience to just sit there on one pair. And a lot of people, you've seen it as well, a lot of people make a lot of money just trading gold. Like a huge amount of money just trading gold. And it's because they're looking for one simple thing on gold over and over again. And some people have the discipline to do it. That's because you can have the discipline to do that. But again, we're trained and taught that, you know, it's unnecessary, you can diversify. And diversification isn't slowing you down, it's actually making you a better trader. You just don't realize it, because there can be periods for 2-3 months where, you know, the market's just giving you nothing, or it's giving you something but at the wrong time of day and stuff, and then you miss it. And then that's playing onto your psychology, where you're missing so much other trading potential across the board, where that's the why trading other pairs is good. But if you had one thing primary focus, it's great. Like I have had this habit for the majority of last year, where I had the S&P 500 on every single day. I still have it on now actually, and I just studied it. Obviously I've cleared the charts now, but if you go through any of the old videos, the S&P was part of my everyday forecast, every week forecast, and I got very, very good with understanding it. And then in lieu, I was able to invest in it, and say since January, March, end of March till now, I've made around about 11.6k on it. So, you know what, like I'm really happy with the year I spent. I spent a whole year studying one pair, you know, and then that paid dividends for the next year over. So it just shows like you can pick 2-3 pairs to just study every single day for a year. Think about how good you'll be at those 2-3 pairs. Pick a yen pair, pick a US dollar pair, and pick a Aussie pair or a New Zealand pair, something out of your comfort zone, and then just stick with it. You know, if you really, really wanted to be so good, you could just make so much money. Like pick an indice then. Pick an indice like S&P 500, pick a commodity like gold, and then pick a currency like New Zealand yen, right? And just get very good. Get very, very good at trading it. Get really, really good. And then those become your golden trades. So when something starts shaping up on that, you're always going to be ready for it. That's kind of how a lot of us are with Euro, US dollar, DXY and stuff. But, you know, not a lot of people are willing to put in that amount of work, and that work compounds. You know, first few months you'll be like, oh, I missed that, I didn't understand it. And then you start seeing patterns, and then your brain starts recognizing them. Like your reticular activating system for those pairs work really well. Anyway, I'm going to go shoot off because I need to go get some coffee and brunch with my wife. But let's see. So why won't you take the 1 hour increase on UK oil or wait for the insurance? Let me see just before I go. Let me see that. So UK oil. Oh, why wouldn't I take it? Because there's a correction from a correction. You see, so this area isn't really anything majorly significant, really and truly. Even though that's kind of a failed continuation, I would have liked to at least see that play out, and then it would have committed, but we didn't get that. You see how it failed here as well, then it developed. I'm now curious to know, is this going to be a base for something? So the odds are if I try to take a risk entry there, this could just develop and come up higher and then come back down and then do that, right? And then do that and go higher. So I'm trying to mitigate as much risk as possible from something happening because it came from a correction. So this is actually still part of accumulation for something that I don't entirely know. But I do know that when I zoom out to the higher time frame, we did come from momentum, and it's looking like a phase 1, phase 2, phase 3 to the upside. But there is a gap to the downside right now and a bit of a retest here. So it's kind of in that middle zone right now where it's retesting this section here. It's left a gap to the downside, and it's kind of like it could move higher to create continuation and move, but it's still below that point to the left. Or if I'm correct, which I'm thinking is more probable, a short is coming into play, but it's going to come in a place where it's not so easy to decipher. So then when I look at it a bit closer right now, I'm thinking, all right, cool. Well, if this is the area of interest and we've got that little bit above, we might get structure completion, but it might spike a bit higher, tagging people out, and then just drop in, give us insurance entry. Even if the insurance entry is down there, whatever, as long as I can manage it into the low, then I can at least play that to then be a trade to go lower. And there might be scaling opportunities and so forth, but I want to ensure that I'm getting in at the right time on this trade. I don't want to be jumping in doing that. We can definitely hop on a call. Obviously not today. Tomorrow is my wife's birthday, so definitely not tomorrow. But throughout the week, sounds good. Sounds good for sure. All right, sweet. Zeph, it's just me and you. I'm gonna hop off now. So it was a pleasure speaking with you. Take care, and I'll catch you guys in the next one. See you later, guys. Yeah, take care.